what you're going to see over the coming 4 years is progressive adoption of Bitcoin by a bunch of banks, a bunch of various regulated entities operating in every major jurisdiction.
Saylor begins by reflecting on January 2024 as the dawn of corporate adoption of Bitcoin, pinpointing pivotal moments such as the SEC's approval of spot ETFs for Bitcoin. He emphasizes the significance of regulatory decisions in dispelling uncertainties surrounding Bitcoin's legitimacy and potential for replication. Drawing an analogy to structural engineering, Saylor highlights the importance of eliminating indecision to propel corporate initiatives forward.
I think that January of 2024 was the beginning of the period of corporate adoption of Bitcoin. And, that first big catalyst was the SEC's approval of spot ETFs for Bitcoin. The second big catalyst is going to be the SEC's denial of every other crypto application for a spot ETF. And the entire world was thinking, will the regulators ban Bitcoin? And we answered the question, no, it won't be banned. And then the next objection is, but will it be copied? And when we actually see the regulators deny the applications of the copies of other crypto assets, then we will have checked the box. It won't be banned, it won't be copied. And generally, when people are, if you're deciding whether to build a 100-story skyscraper and invest hundreds of millions of dollars on it, and someone says, well, you either need to use steel or you need to use bronze. And you say, well, which one is the right one? And the answer is unclear. Well, it might be that the bronze is the right one and steel collapses, or it might be steel is the right one and bronze collapses. That paralyzes a big corporate project. But when you get past that and you realize, well, there's just steel and there is no second best metal for structural civil engineering, once you get to that point, the project moves forward because it's pretty obvious to the corporation they want the 100-story building. They just don't want to be paralyzed by the indecision and the fear of making the wrong choice. So I think that the critical catalyst will be not just the institutional or the regulatory acceptance of Bitcoin as an institutional asset, but it'll also be the regulatory rejection of the alternatives. If we go back to LightSpark's activities again, they've got dozens and dozens of corporate customers that are regulated compliant entities that want to integrate Lightning in order to provide instant, cheap, final settlement. Each of those companies is operating in a different jurisdiction, perhaps with a different set of regulators, and they may have a different mission, right? The mission of a crypto exchange or a large-scale bank would be different than a simple money transmitter, and that might be different than an e-commerce company. So the reason we need corporations to be involved is corporations can afford to hire the array of lawyers, the array of financiers. They can put in place very expensive accounting systems. And those systems, will then have normally built into them all the various compliance rules, perhaps state by state, perhaps nation by nation. The rules for doing banking and money transfer in the UK will be different than France, will be different than California. So I think what you're going to see over the coming 4 years is progressive adoption of Bitcoin by a bunch of banks, a bunch of various regulated entities operating in every major jurisdiction. The rules regarding transfer are going to evolve. In some cases, they're clear. In some cases, they're hazy. In some cases, they're being contested. In some cases, they're very unclear and uncertain. I don't think that in 4 years, every question will be answered, but I do think 4 years from now, you'll have a lot more clarity than you have right now. And that clarity, to a certain degree, will come because of the entrance of the large entities in the space. For example, the success of the Fidelity and the BlackRock ETFs will accelerate clarity with regard to can Nasdaq and or other stock exchanges trade options? Under what when can they trade options? There's already interesting movement afoot for the New York Stock Exchange to start trading 24/7, and that's been created by the crypto enthusiasm. So I think you're going to see an evolution of traditional finance organizations. I think you're going to see a lot of lobbying for more precise legal clarity and regulatory clarity. And you're going to see a lot of building, both by new digital assets companies, as well as you're going to see all the traditional accounting and traditional finance operators. They're going to upgrade their systems in order to support this new Bitcoin-backed economy. And it's going to take a lot of money and a lot of accountants, a lot of lawyers, and a lot of thinking and some time. But because of that action, I think we'll get to a much better place.
Delving deeper, Saylor explores the indispensable role of corporations in driving Bitcoin adoption, particularly in navigating regulatory complexities across jurisdictions. He underscores the resources and expertise that corporations bring to the table, enabling them to navigate legal and compliance challenges effectively. Saylor predicts a gradual but progressive adoption of Bitcoin by banks and various regulated entities worldwide, leading to increased clarity and regulatory evolution over time. Saylor envisions a transformation in traditional finance institutions, driven by the growing influence of Bitcoin and digital assets. He anticipates heightened lobbying efforts for legal and regulatory clarity, alongside substantial investments in upgrading financial infrastructure to accommodate the emerging Bitcoin-backed economy. Saylor emphasizes the significant financial, legal, and technological considerations involved in this evolution, foreseeing a gradual but inevitable shift towards a more Bitcoin-inclusive financial landscape.
I think most corporations have their hands full competing on the product side. So most companies have either a very competitive product market or a very competitive service market. So their first mission is, how do I have the world's greatest product or service? Their second mission oftentimes is, how do I do it efficiently? And so in the background, they're always swapping out technologies. And when the web comes along, or when the Internet of Money comes along, they'll look and they'll say, well, right now it's 2% fee, and can I get that to be a 0.1% fee? So they will discover new technologies as a way to save money, or if we take, say, Cash App, for example, it supports Bitcoin, and that's a new technology that generated $10 billion a year of top line sales. So they use it to differentiate their product. So if they find a way to differentiate or to save money, they'll be very enthusiastic. Then you have, on the balance sheet side, you have a set of financial actions that they take in reaction to interest rates. If interest rates are gyrating to zero, they're changing their balance sheets. When interest rates are going to the moon, they're moving the other direction. And they're, of course, reacting to shareholder pressure. And if the shareholders are saying, give us the money back with a buyback or a dividend, and they're reacting to that. But throughout all of that, right, there is this spreading orange wave. And the orange wave is, of course, Bitcoin, and it is spreading into the capital markets through a dozen publicly traded Bitcoin miners. It's entered through companies like MicroStrategy and Tesla and Block and Coinbase that all have a Bitcoin interest. It's spreading through nearly a dozen US-based ETFs. But now we have Hong Kong-based ETFs, and we have soon Australian ETFs, and we have some European ETFs. Well, as each of those things spread, they slurp up capital. As their performance outstrips gold or the S&P or bonds, they get headlines, and that causes them to creep onto the front page of CNBC and Bloomberg and Fox Business. And that starts to plant some questions in the minds of financial advisors and institutional investors. And they, in turn, start to talk to other CFOs. And so I think that the orange tide is spreading. I think that corporations, especially publicly traded corporations, will tend to be on the conservative side. You'll probably see institutional investors move before the corporations. You'll see sovereign wealth funds move before the sovereign. You'll see the private companies move before the public companies. But, no, there's no way to stop an idea whose time has come. And the success of the idea will tend to slurp up the capital in the marketplace, because we call them capital markets for a reason. The capital is going to go to where it can find the highest return and where it gets treated the best. And as that capital reallocates, then industry watchers take note, and then the Overton window shifts.
Analyzing corporate behavior, Saylor acknowledges the primary focus on product competitiveness and operational efficiency. He explains how companies leverage new technologies, including Bitcoin, to differentiate their offerings or streamline operations. Saylor also explores the role of financial considerations, such as reacting to fluctuating interest rates and shareholder demands, in shaping corporate decisions regarding Bitcoin adoption. Saylor paints a vivid picture of the expanding influence of Bitcoin, likening it to an orange wave sweeping through capital markets. He highlights the growing presence of Bitcoin in publicly traded companies, ETFs, and institutional portfolios, driving mainstream attention and fueling conversations among financial advisors and institutional investors. Saylor predicts a gradual but unstoppable shift towards Bitcoin adoption across various sectors, driven by its superior performance and growing recognition as a legitimate asset class. Please like and subscribe my channel.